Here's a shocking fact that might surprise you. In the last 20 years, silver has outperformed the stock market during every major economic crisis. Yet when you walk into your bank and ask about protecting your retirement savings, they'll never mention precious metals. Why is that? Today, I'm going to reveal what banks don't want you to know about silver as an investment in 2026. And more importantly, how understanding this could be the difference between a secure retirement and watching your savings disappear. Welcome. I'm here to give you the straight facts about silver investing. No sales pitch, no pressure, just education. Over the next 15 minutes, we're going to cover everything you need to know about silver as an investment option for 2026. We'll explore why banks steer you away from precious metals. We'll look at the current economic landscape and why traditional retirement accounts might be at risk. I'll walk you through exactly how precious metals IRAs work, and I'll show you the historical data that proves why so many retirees are moving part of their savings into physical silver and gold. This isn't about getting rich quick. This is about protecting what you've already worked so hard to build. If you're between 55 and 70 and you're concerned about your retirement security, this information could be crucial for your financial future. Let's start with the basics. What exactly is silver as an investment? Silver is a precious metal that has been used as money for over 4,000 years. Unlike paper currency, silver has intrinsic value. It's used in electronics, medical equipment, and industrial applications. This means silver has real-world demand beyond just investment purposes. When we talk about silver investing for retirement, we're specifically discussing precious metals IRAs. These are special retirement accounts that allow you to hold physical silver and gold instead of just stocks and bonds. Here's how it works. You can roll over funds from your existing 401k or traditional IRA into a self-directed precious metals IRA. The IRS has strict rules about which metals qualify. For silver, it must be 99.9% pure. Popular options include American Silver Eagles, Canadian Silver Maples, and certain silver bars from approved refiners. The silver is stored in an IRS-approved depository, not in your home. You own the physical metal, but it's professionally stored and insured. This is completely different from silver ETFs or mining stocks. With an ETF, you're buying paper that represents silver. With mining stocks, you're betting on companies. With a precious metals IRA, you actually own real physical silver. The difference matters, especially during economic uncertainty. Now let's talk about why this matters in 2026. We're facing economic challenges that haven't been seen in decades. Inflation is eating away at purchasing power. The national debt has reached unprecedented levels. Interest rates are volatile. And here's the critical issue for retirees. Traditional retirement accounts are heavily dependent on the stock market and bond market. Both are vulnerable to economic shocks. Look at what happened in 2008. Many retirees lost 30% to 40% of their savings almost overnight. The same thing happened in 2020, though the market recovered quickly due to massive government intervention. But here's what most people don't realize. Each time the government intervenes, they print more money. More money in circulation leads to inflation. Inflation reduces the purchasing power of your fixed income. If you're living on a pension or Social Security, you're getting hit twice. Your investments might recover, but everything you buy costs more. This creates what economists call the retirement squeeze. Your money is worth less, but your expenses keep growing. Medical costs, food, energy, housing, everything is more expensive. Traditional financial advisors will tell you to rebalance your portfolio, move from growth stocks to dividend stocks, increase your bond allocation, but bonds lose value when interest rates rise, and dividend stocks can cut payments during recessions. You're essentially rearranging deck chairs on the Titanic. This is where precious metals IRAs come in as a solution. Let me walk you through exactly how this works and why it addresses the problems we just discussed. First, eligibility. If you have an existing 401k, 403b, traditional IRA, or Roth IRA, you can likely do a rollover. You don't need to roll over your entire account. Many people start with 10% to 20% of their retirement savings in precious metals. The process starts with choosing a reputable precious metals dealer. They'll help you set up a self-directed IRA with an approved custodian. The custodian handles all the paperwork and ensures IRS compliance. Next, you decide how much to roll over. This can be done as a direct rollover, so you never touch the money. No taxes, no penalties, no hassles. Then you choose your metals. For silver, you have several options. American Silver Eagles are the most popular. They're backed by the US government and widely recognized. Canadian silver maples are also popular, with beautiful designs and high purity. You can also choose silver bars from approved refiners like Pamp Suisse or Royal Canadian Mint. Once you make your selections, The dealer purchases the metals and ships them directly to an IRS-approved depository. You receive documentation showing exactly what you own. The metals are fully allocated to you and insured. Now, let's talk about taxes. If you're rolling over from a traditional 401k or IRA, there are no immediate tax consequences. You'll pay taxes when you take distributions, just like with any traditional retirement account. If you're rolling over from a Roth account, the same rules apply. No taxes going in, no taxes coming out in retirement. The key advantage is that precious metals often move opposite to traditional investments. When stocks and bonds are falling, gold and silver often rise. This provides what financial experts call portfolio diversification. You're not putting all your eggs in one basket. Let me show you the historical evidence that supports precious metals investing. During the 1970s inflation crisis, silver increased over 2,000% from its lows. From 1970 to 1980, while inflation was destroying savings accounts and bonds, silver went from around $1.50 per ounce to over $50 per ounce. During the 2008 financial crisis, while the S&P 500 lost 37%, silver initially fell, but then recovered and gained over 80% from its crisis lows within 2 years. From 2008 to 2011, silver went from around $9 per ounce to nearly $50 per ounce. That's a 400% gain while many retirement accounts were still recovering. More recently, during the COVID pandemic, silver gained over 70% from March 2020 to August 2020, while traditional markets were extremely volatile. But here's what's really important for retirees. Silver has maintained purchasing power over long periods. An ounce of silver in 1920 could buy about 5 gallons of gasoline. Today, an ounce of silver still buys about 5 gallons of gasoline. Try that with a dollar bill from 1920. Experts continue to see value in precious metals. Ray Dalio, founder of the world's largest hedge fund, has publicly stated that investors should have 5% to 10% of their portfolio in gold. Robert Kiyosaki, author of Rich Dad, Poor Dad, regularly advocates for precious metals as protection against currency debasement. Even central banks are buying gold and silver at record levels. If central banks think precious metals are valuable, shouldn't individual investors consider them too? The key is not to expect precious metals to make you rich overnight. They're insurance for your portfolio. They preserve purchasing power and provide stability when everything else is volatile. If you're convinced that precious metals deserve a place in your retirement portfolio, here's exactly how to get started safely. First, decide on your allocation. Financial experts typically recommend 5% to 20% of your retirement savings in precious metals. Start conservatively if you're new to this. You can always add more later. Second, research precious metals dealers. Look for companies that have been in business for at least 10 years. Check their Better Business Bureau rating. Read customer reviews, but be aware that both fake positive and fake negative reviews exist. Ask about their buyback policies. Reputable dealers will buy back the metals they sold you. Third, understand all the fees involved. There will be setup fees for the IRA, annual custodian fees, storage fees, and dealer markups on the metals. A good dealer will explain all fees up front. Be wary of anyone who's not transparent about costs. Fourth, verify storage arrangements. Your metals must be stored in an IRS-approved depository. These facilities have high security, full insurance, and regular audits. You should receive detailed statements showing exactly what metals you own. Fifth, be cautious of high-pressure sales tactics. Legitimate precious metals investing is a long-term strategy, not a get-rich-quick scheme. Be wary of dealers who push rare coins with huge markups or who claim silver is about to skyrocket. Sixth, understand the timeline. The rollover process typically takes 2 to 4 weeks. Don't expect overnight results from your precious metals investment. This is about long-term wealth preservation, not short-term gains. Finally, keep records of everything. Save all documentation about your precious metals IRA. This includes purchase confirmations, storage statements, and any correspondence with your dealer or custodian. Let me wrap up what we've covered today. Banks don't typically recommend precious metals because they don't make money from them. Banks profit from lending, credit cards, and investment products with ongoing fees. Silver sitting in a depository doesn't generate the same revenue stream, but that doesn't mean precious metals aren't valuable for your retirement security. We've seen how economic uncertainty, inflation, and market volatility threaten traditional retirement savings. We've explored how precious metals IRAs work and why they can provide portfolio diversification. We've looked at historical evidence showing how silver has performed during economic crises, and we've outlined exactly how to get started safely. The decision to include precious metals in your retirement portfolio is personal. It depends on your risk tolerance, your current financial situation, and your concerns about the future economy. but the information should be available to make an informed choice. If you're interested in learning more, I encourage you to request educational materials from reputable precious metals dealers. Ask questions, compare options, take your time. This is about protecting your financial future, not making a quick decision. Remember, the goal isn't to get rich from precious metals. The goal is to preserve the wealth you've already built and protect your purchasing power in retirement. Silver and gold have served this purpose for thousands of years. There's no reason to think that will change now. Your retirement security is too important to leave to chance. Consider all your options, including precious metals, and make the choice that gives you confidence in your financial future.